This is Alan Bush with ADMIS with the Daily Financial Futures Forecast for Thursday, August 13th. In the stock index futures, did see some strength in the overnight trade. This after the People's Bank of China took some steps to limit the declines in the Chinese yuan, although overall there has been quite a bit of pressure over the last several days in the Chinese currency, which some viewed as a sign of weakness for China's economy, basically on the thinking that if things were so bad there that they needed to do this drastic move of a currency devaluation, taking the Chinese yuan down to its largest two-day drop in over 20 years. We do think, though, that this should be viewed as another stimulus effort. Obviously, this will benefit China directly, but indirectly, it forces other central banks around the world to maintain easy credit policies, at least those that have an easier policy, such as the European Central Bank. And it's an influence on those central banks that are a bit on the hawkish side, namely the Fed and the Bank of England, to potentially delay a rate increase. So the currency wars are on, now re-instigated by the Chinese currency devaluation, and the ultimate impact is to lower interest rates globally, and lower interest rates around the world has to be viewed as a stimulus for the global economy. So the end result is, I think, that stock index futures, although initially coming under pressure on the Chinese devaluation, will ultimately be well supported by the ramifications of what the Chinese have done in the currency markets. Also, now this may not be a time to talk about the bullish case for stock index futures after we have seen such a large decline over the last several days or so, but I think we will see new contract highs in the S&P futures. Don't forget, we do have a double top pattern at historical highs that I think is probably attracting quite a few buy stops. At least anyone that is short, I think will have a buy stop above these contract highs, above that double top, and I do think we will ultimately take out those highs. As far as the foreign currencies, a big decline in the dollar index yesterday on ideas that the Fed may be forced to delay a rate increase in light of the Chinese currency devaluation. Once again, the currency wars are on. The Fed, I think, cannot afford to have a dollar that is too strong based on what is likely to happen with earnings for multinational companies and the overall export business. So I still think the longer-term trend on the dollar index is lower. Seeing the pound relatively holding up well after UK home prices coming in at a one-year high. This is also helping the pound to gain against the euro currency. And the euro currency lower, even though we did have news that the GDP in Greece coming in with a plus number, up 0.8% versus expectations of a 0.5% contraction. And the commodity currencies, again, trading with the crude oil. Crude oil lower, the Canadian and the Australian dollar under some pressure. As far as interest rate markets, the probability of a rate increase at the Fed's September meeting is now down to 39%. Last week it was somewhere above 50. So expectations of a rate increase have definitely dropped off in light of the Chinese currency devaluation. So I think I'd stand aside in the interest rate markets for a while with all of these cross currents, but instead I would focus on the long side of stock index futures on breaks and the short side of the dollar index on rallies. So good trading, everyone. And once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.